Hey everyone, welcome back to Entrepreneurial Edge. Now imagine waking up every single month to $1,000 or more in dividends hitting your brokerage account. That's the power of building passive income streams, and it's something I'm incredibly passionate about. In today's video, I'm going to break down exactly how you can achieve $1,000 a month in dividends, even if you're starting from scratch. We'll be covering everything from understanding dividends to investing in high-yield dividend stocks and ETFs, so you can start building your path to financial freedom today. Make sure to like this video and subscribe to our channel for more financial tips and strategies that can help you build long-term wealth. Let's make sure we're all on the same page about what dividends are. Dividends are payments made by companies to their shareholders. When you buy stock, you're buying a piece of the company. As a part owner, you're entitled to a share of the profits. Dividends can provide a steady stream of passive income.
One of the biggest differences I've observed between how wealthy people and those struggling financially manage their money comes down to this. Wealthy people focus on acquiring assets, while those struggling often find themselves trapped in a cycle of acquiring liabilities. Now, what do I mean by that? Assets are things that put money in your pocket, things like dividend-paying stocks, rental properties, or businesses. On the other hand, liabilities are things that take money out of your pocket. Things like cars that depreciate in value, expensive vacations, or that daily latte habit that adds up more than you realize.
When it comes to investing in the stock market, there are two primary ways to make money. The first, and the one most people are familiar with, is appreciation. This simply means buying a stock at a lower price and selling it later at a higher price. It's the classic buy low, sell high strategy. While this can be a great way to grow your wealth, it does require timing the market, which can be tricky. The second way to profit from stocks is through dividends. As we discussed earlier, dividends are those regular payments you receive just for owning shares in a company. This provides you with a steady stream of passive income, regardless of whether the stock price goes up or down. Focus on large, established companies for dividend income. Now, it's important to note that not all companies pay dividends. Smaller, newer companies, especially in the tech sector, often reinvest all their profits back into the business to fuel growth, and that's perfectly fine. But when you're looking for consistent dividend income, you generally want to focus on larger, more established companies with a proven track record of profitability and dividend payments. Think companies like Pepsi, Coca-Cola, Johnson & Johnson, or even real estate investment trusts, or REITs. These companies have been around for decades, have weathered economic storms, and continue to generate profits and reward their shareholders with dividends.
The power of compounding. Reinvest your dividends. Compounding is a powerful tool for building wealth. Reinvesting dividends buys more shares, generating more dividends. For example, invest $1,000 with a 4% dividend. Earn $40 in the first year, reinvest it. Next year, earn dividends on $1,040. This snowball effect leads to exponential growth.
Example: investing in Pepsi, a dividend aristocrat. Let's look at a real-world example of how investing in dividend-paying stocks can help you achieve your financial goals. We'll use Pepsi, a company I've personally invested in, as an example. Pepsi is considered a dividend aristocrat, which means it has a long history of increasing its dividend payments year after year for at least 25 consecutive years. Let's say you start by investing $500 per month into Pepsi stock. Assuming a 4% annual dividend yield, reinvested quarterly, you would be on track to reach your goal of $1,000 per month in dividend income within roughly 12 years. Now, keep in mind that this is just an example, and actual returns may vary.
High-yield dividend stocks and ETFs, turbocharging your passive income. If you're looking to accelerate your path to $1,000 per month in dividends, another strategy you can consider is investing in high-yield dividend stocks or exchange-traded funds, also known as ETFs. High-yield dividend stocks, as the name suggests, are companies that pay out a higher percentage of their profits as dividends. Now, it's important to do your research and make sure the company's high dividend payout is sustainable. ETFs, on the other hand, offer a great way to diversify your portfolio and gain exposure to multiple high-dividend stocks without having to pick individual companies yourself. Some popular dividend ETFs include VOM and VYO. Consistency and patience, the keys to dividend investing success. Now, before we wrap things up, I want to leave you with two of the most important principles when it comes to dividend investing, and really investing in general: consistency and patience. The key to building wealth through dividend investing is to consistently invest over time, reinvest those dividends, and let the power of compounding work its magic. It's not about getting rich quick. It's about making smart, informed decisions, staying disciplined, and letting your money work for you over the long term. Education and information. Empowering yourself as an investor. The last piece of advice I want to emphasize is the importance of education. The more you know about investing, the better equipped you'll be to make informed decisions about your money. Take the time to understand how dividends work, research the companies you're considering investing in, and stay updated on market trends. There are tons of resources available online, from reputable financial websites to educational YouTube channels like this one. The more knowledge you have, the more confident you'll be in your investment decisions.
Thanks for watching. I hope this video has given you a clear roadmap on how to achieve $1,000 per month in dividends, even if you're starting with nothing. Remember, the key is to consistently invest in quality dividend-paying companies or ETFs, reinvest those dividends, and let the power of compounding work its magic over time. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more content on financial independence and passive income. And as always, remember to do your own research and consult with a financial advisor before making any investment decisions. Happy investing!